A new era of competition began on our market today. The first day's trade of Chi-X, now officially an alternative to the Australian Securities Exchange, which has enjoyed over 20 years of monopoly. Chi-X, owned by Japanese bank Nomura, had a soft launch. For the first 6 days, it will trade in 8 of the largest companies like BHP Billiton, Leighton Holdings and Woolworths. I spoke with Chief Executive Peter Fowler earlier. Peter Fowler, welcome to Late Line Business.
Thank you very much, Tikki.
Well, congratulations on your start. Where do you see your market share in about 12 months' time, do you think?
That's something really that we don't wish to sort of take a punt at. We'll leave that to market participants to determine what sort of share we get in the longer term.
Do you imagine this share will be largely taking trade away from the ASX, or is your arrival really going to grow the market at all?
Our firm belief is that we will attract new liquidity into Australia and the overall market will grow, and obviously we're looking forward to obtaining a reasonable percentage of that larger market.
You're promising to drive down prices. Now, I see CommSec told a parliamentary committee last month that investors would get zero benefit from competition as regulation costs and technical costs would offset lower trading fees.
I think that may be the case for some brokers and certainly the case in the short term, but competition is going to be here for the long haul, and over the course of time I think the market will derive the benefits from competition and from having greater choice.
There seems some pressure from the broking side that the exchanges should bear more of the costs.
At the end of the day, certainly the Chi-X view is that it's the investors and the listed companies that obtain the benefit, and ultimately it will be they that bear the cost.
Righto. Well, obviously one of the things that you are going to be bringing to the market is a lot more high-frequency trading. That's great for exchanges, of course, both yourselves and the ASX. But how are you actually going to help companies raise capital, which, after all, was originally what the stock exchanges were there for?
And still is the case as far as the rationale for the existence of the exchanges. But that will only work if there is a good liquid secondary market, and that's what we intend to deliver, a good secondary market. And certainly there will be some increase in high frequency traders, but we think that's part of adding liquidity and providing price improvement.
You have said, I know, that you've got a reasonable amount of support from the broking community. Do you worry that there will be a tremendous loyalty to the ASX brand and that perhaps we might have more of a parochial view to a foreigner?
No, certainly the feedback we've had to date is that we've had a very good reception amongst the Australian brokers, so there's nothing to suggest that that would happen.
You've had obviously very thin trade. I think BHP today was only 43,000 as compared with the ASX 9 million. Is that's just day one, I suppose?
Very much so. We asked for participants to go in there and trade very lightly. We just want, in this first period, which we've called a soft launch, we want people to take it very easy. We'll have a look at our true volume in later weeks, but at this moment in time it's just making sure all systems are bedded down and working properly. So we're very happy to have come through day one with that successful result.
ASIC has market integrity rules, of course, where brokers must deliver the best execution for their clients. From March, I understand, there's something called multiple market access. What is that, and will customers actually be able to request which market they deal in?
Yeah, from a customer point of view, they'll still go through their broker, and the broker will make the decisions for them in terms of where is best price. But if a customer has a preferred venue, they'll be able to specify their preferences to the broker.
So it won't be just the cheapest way to do the deal?
Certainly not. In terms of retail flow, the broker will have a regulatory obligation to find the best outcome for the client.
What about other areas beyond trading? I'm thinking of different instruments, derivatives, which have been very successful for the securities exchange. Is that an area that you will be interested in going into?
We don't have firm plans in the longer term, but certainly it's an area that we'll be looking at in due course.
And what about data feeds? I know that's a big earner for the stock exchange, which has a monopoly at the moment, I think. Things like pricing data used by traders. Would that be an area you'd look at too?
Again, we've started off at the beginning with a royalty-free distribution of our market data, but in the longer term, we'll keep our options open.
Well, there are some very interesting options there for you, Peter Fowler. Thank you very much for joining us on day one.
Thank you very much, Jackie.